Hey, hi there. What is happening, friends? Nate Atkin here, Hummingbird Mortgages. And I'm coming at you because you know I love y'all. This is basically essentially coming out to everybody in the Hummingbird Mortgages kind of family database. Whether we have a mortgage together or whether we're working together, we provided you, you're an investor, we provided you with guidance to some extent. I feel compelled to provide a market update as it pertains to rates and tariffs and fixed and variable and Bank of Canada and all that kind of stuff. And I'm really going to be speaking heavily to the variable rate mortgage holders in my database. So if that's you and you have a variable rate mortgage, it's really important to take this information in and consider everything because I've been getting a lot of kind of feedback and questions to a lot of our emails that we send out on things, and we're always kind of asking for, excuse me, we're always kind of asking for your input on what questions do you have? A lot of people have great questions on construction and renovations and budget and should I use a HELOC and should I use a credit card and all that kind of stuff. But most often we hear what's going on with the rates, what's happening with the tariffs, how is it going to impact mortgages and things like that. So I'm going to kind of guide us in the right direction here. I got two screens going. So if I'm not looking directly at you here, sometimes it's because I'm reading some stats and things like that. But I'm going to keep it real for you as always. Here's the deal. Okay. So again, as a quick refresher, fixed versus variable rates. Fixed rate mortgage is going to be the mortgage that's fixed, it's stuck, it's set it, forget it, doesn't change. Boom, that's the rate, that's what you get. You stay there for the whole term. Fixed. The fixed rate mortgage, the rates move dependent on the bond market, something that nobody really pays any attention to ever. You never would unless you are a trader or you're in the financial space. The bond market, you never hear about it in the news ever. Okay, so that's fixed rate mortgage. Variable rate mortgage is the one that it can fluctuate, it can move with the Bank of Canada's announcements. So that's the one that you hear most often in the news because it's trigger bait. A lot of it's bullshit. A lot of stuff you hear like on CTV and on CBC and all that kind of stuff is just like, hey, like it's to stimulate worry and fear for people. So you got to always make sure that you're listening to and following the actual data and numbers, right? So the variable rate mortgage is what the Bank of Canada is doing. And essentially, the Bank of Canada moves that rate up and down based on, for the most part, a couple of key indicators. One is inflation. What's inflation in Canada doing? The other is like unemployment, right? There's a few things that go on now, most recently trade, tariff, international trade, the government debt load. Like these things have an effect on the variable rate mortgage. And for you as a mortgage holder, what's most important is what do I pay? What's my rate, right? And that rate will go up and down. And we don't want to be in a position where, the rates start to skyrocket and you're not prepared for it. And conversely, we don't want to be in a position where folks are taking a fixed rate where we think that the rates are going to drop. So that's our job, right? To monitor that for you. Okay, fixed, variable. Where are we now? Right now, we're in a place kind of unique. We're in a place where they're kind of even, right? Like the fixed rate mortgage is still a little bit of a winner over the variable rate, but they're kind of almost, for the most part, the same. If you were to take one today, they're literally like 5 basis points apart, right? Like 4.3, 4.24, 4.35. Like they're literally that close. It's dollar and cents wise, it's almost nothing. There's like no difference. But where it's going is the most important thing. And nobody knows. So if anyone tells you they do, they're lying. Okay. That's bullshit right off the bat. I'm going to kind of de-straight. But we do have a lot of really good indicators in the market that tell us where we really think where it's going to go somewhat at some decent amount of accuracy. Okay. The only thing is that Trump and tariffs and the volatility of that man and what he can do internationally has really thrown things for a loop. And what we're seeing right now is this. We've got the kind of projections where the variable rate mortgage it's come down substantially in the last year and a half, 2 years, substantially. And it's sitting right now kind of at an even keel number. There were early indications that it was going to come down quite a bit further. Now it's kind of more like with inflation has gone up in Canada. Unemployment's a bit sticky. So now predictions are kind of like that the variable rate mortgage is probably going to stay around where it is, maybe go a little bit lower, maybe, but kind of stick around where it is for the most part for the rest of the year. And it'll all depend on what happens with Trump and the international markets and of course our inflation and our employment in Canada as to whether or not into the end of 2025 and early 26, whether or not that variable rate will drop down a little more or go up. That is still yet to be seen. So what's important to note is this. You always need to look at your situation as a family, as a person, as a borrower. What am I comfortable with, risk tolerance wise, and what do I think I'd like to do? You never try to time the market or win the market because no one can do that. They're lying if they say they can. You always want to make good decisions based on the information that we have in hand. And the information that we have right now is this. If you are in a position where, so if you're a variable rate mortgage holder, whether or not you think you might want to stay with that variable rate mortgage or lock into a fixed now. That's ultimately what this discussion is all about. Me trying to give you as much information I can so that you can make that decision if you think you might want to lock in now and fixed, or you think you might want to just stay on a variable. Now, of course, the variable rate, as it changes, it will change gradually. Keep that in mind, right? They don't just all of a sudden change it 1% or 2% at once. It's gradual. But the bond market, anytime that you want to lock in the variable rate mortgage, you lock in at that moment where the fixed is, right? So for right now, for example, if your variable rate mortgage is wherever it is, 4.3, 4.7, 4.9, it all depends on the product that you have. Right now, the fixed rate is around 4.4, kind of like a 5-year fixed rate, 4.4, 4.34, 4.51. That's where it is, fixed rate mortgage. So if you were like, you know what, I don't want to risk anything happening with the variable rate mortgage, I just want to lock in. That's kind of what you could expect right now, okay? If you want to continue to stay where you are, you can continue to ride the variable wave, which can either kind of go down a little bit, go up a little bit, or stay where it is, okay? Depending on how long your term is. So it's important to keep that in mind. Now, if you are thinking of selling, moving, then it's always best to stay on the variable because, of course, if you were to break the mortgage early, it's only a 3-month interest penalty. Versus the fixed rate mortgage that if you were to break it, of course, it is a interest rate differential. The penalty is more substantial for a fixed versus a variable. That's question one. Do we think we're going to stay? Okay. Well, we can be a fixed or a variable then. That's fine. If we're going to move or refinance, variable. That's question number one. The other one is your nerves, your risk tolerance. Like, do you not sleep at night because you're thinking about the mortgage rate? Most people are pretty good now. It's not a huge concern, but as time goes on, it could become a concern of some people. If you're very risk averse, then it's always good to just lock it in fixed and not have to think about it. That's a second one. The next is going to be, budget wise, right? Like, where are you budget wise? If you're like absolutely at the top end of your budget and there's no way you could handle any increases, then quite often it's a smart move to lock into fixed, set it, forget it, not have to worry about it, right? So that's kind of where we are right now. Where things are going will all depend on the indications of where inflation goes and what Trump does with the tariffs. But if you have any risk aversion, if you think that you may want to lock in, let me know. We can have that discussion and we can look at getting you fixed into locked into a mortgage so that you don't have to have that unease and nerves that will drive you crazy at night if that's the case. Okay, hope that answers a lot of questions for you so far. We'll see where things go. I'll keep you updated. We'll do these more often. Have an amazing one. Talk soon.